Let me get this ready. Okay, we're up.
Awesome.
Okay, you can go.
All right. Hey, Tackle Traders, Coach Holmes coming to you on this Wednesday night. YouTube live here for Tackle Trading. Thanks for everybody coming out. I think this is going to be a lot of fun here. I'm going to talk about money management tonight. It's basically the holy grail of trading. A lot of folks don't know that, but the reality is, if you can conquer the money management aspect of trading, then you put yourself in a position to be successful. If you fail to do that, then things can get a little bit challenging. So the reality is there's lots of different ways to do it. There's as many different ways to do trading as is to do their money management as there is to do trading. So the reality is we're going to explore some of those things tonight. So it's hard. I'm not sure if this is interactive or not. So I guess I'll just have to keep on rocking here. I thought I would be able to see the participants, but I guess not. So anyway, we'll soldier on. Anyway, so like I said, kind of the holy grail of trading is money management. The reason it's so important is because trading is a game where you have to be around long enough to let the odds and probabilities work in your favor. Okay, so if you're just new to trading, and I'm sure there's some new folks on here. If you're really new to trading, you might not have experienced the ups and downs that we find in trading, and it's just part of the game, and it might be a little hard to get used to, and it might be a little tough to kind of think about, but it really is one of the most important things to get your emotions in check and get your head around the most important concepts of trading. And that's definitely money management, no question about it. So I guess the first question we need to ask it tonight is what is money management? Okay. And so again, money management, it's just your ability to stay in the game long term. All the traders I know, all the good traders I know, they probably started out with a real lack of money management skills, myself included. All the other folks that I've worked with. But it's a skill that you can acquire. It takes discipline. It's probably discipline's probably the biggest thing that it does. Is it takes discipline, and if you've got that discipline, and you follow the rules of your trading system, and you follow the money management rules that we set forth, or that you come up with on your own, then you at least got a shot at being successful as a trader. I just can't stress it enough. It's really, really that important. So if I was to put money management another way, like I said, it's kind of to preserve your capital long enough to let the odds and probabilities take over. So if you've got a probability system where maybe you're shooting 50% win rate, if you just go through and you win and you lose and you win and you lose, well, at the end of the day, that might not give you the results that you're looking for. Okay, and we're gonna talk a little bit about that tonight. So now, when I say probabilities, what do I mean? Well, the things I'm speaking of are, basically things like risk and reward, or how much can I risk on any one trade and still be around to trade another day. Okay, because I know lots of guys that one in particular that I remember, a few years back, a good buddy of mine actually, got into trading. He put I don't know, he put about 25-30K into an account, and it just so happened at this point in time the markets were just screaming higher. This was, like I said, many years ago, And so he took that account and he ran it up to, I want to say, anyway, is somewhere in the neighborhood of about 40 to 45K in probably a matter of about 3 months. So he really, his numbers were pretty crazy for what he did. The problem with that is he didn't know anything about good money management. He didn't know anything about stop losses. He didn't know anything about risk reward ratios. He didn't know anything about that. He looked at a chart, thought, you know what, this stock's going up, or maybe he didn't even look at a chart. Maybe just thought fundamentally, hey, you know what, you can never lose with Apple, or you can never lose with gold, or whatever the case may be. But he made these decisions. And if we fast forward about 8-9 months after that, his account was almost zero. It was not quite zero, but it was close enough that he was out of the game. And the reality is it was money management. He didn't understand, how much he should trade on one thing versus another. So a $10 stock to him was the same as a $150 stock. He would buy the same amount of contracts. Well, if you don't have good money management practices and techniques, those $150 stocks can fall a long way because typically they're a lot more volatile. Okay. So these kinds of things, you got to kind of work it out for yourself, and put some rules in place that are going to keep you alive, basically. Because the thing is when you start taking some big losses, okay, small losses, okay, we can absorb those, right? That's just part of trading. Good friend of mine calls them expense trades. I really like that term. You can absorb those small little losses, right? But when you start to get those big losses, the problem is that your capital dwindles, and you now have to get a higher ROI, a higher return on investment, to get back to even, and then to start making a profit, which can be a very daunting, not only from a money management standpoint, but from an emotional standpoint as well. So, like I said, I can't stress it enough, and we're going to go through a few things. I kind of put some stuff together tonight for you guys. Unfortunately, I don't know how much it's going to work, so I'm going to play both sides of this coin, because I had a couple little games that I worked out here, and I'll show you guys. Maybe you guys can play along at home, since I haven't got this YouTube live thing figured out just yet, but we'll have some fun anyway. So. All right, so like I said, we kind of delved into what money management is. I want to talk about probabilities, because that's really it's probabilities and odds are really what trading is all about. Trading is a game of math. For those who don't know, trading is a game of skill. It's a game of math. It's like a lot of other things. If you play gin or backgammon, or poker, or any of those games of chance, most people think that it's all just a matter of luck, and you just kind of play long enough, and you increase your skills, and you come out a winner. But the reality is it is these skills that that determine whether you're going to win or lose ultimately. The luck part kind of fades away in the background after you have enough sample size, and the game of skill comes through. Well, this is trading. Trading is exactly that. It's a game of skill. And one of the skills we need, like I said, very, very important, money management. Okay. How can we protect our capital long enough so that when these trades come along, or we have these crazy reward to risk ratios in our favor, that we still have enough capital to deploy to get into those strategies and make some money, so like you said, that's kind of really what I want to talk a little bit about tonight. Before we get there, I'm going to share my screen here. Okay, I can see chat. Okay, no, that's not the one. All right, let's share the screen here, and we'll see what happens. All right, that's one part of it. All right, let's go to, all right. So what I wanted to talk about tonight was, again, I didn't know if I'd be able to see the participants or not, but anyway, basically I want to know if there's anybody out there who thinks they can, they could predict 50% of the time right on a coin flip out of, say, 10 flips. Okay. If you can do this, this is going to mimic, kind of trading per se. So let's say you're a really good trader. Okay. and you can hit 50% of your trades as a winning proposition. Okay. If you can hit 50% of your trades as a winning proposition, then you can set up numbers to, from a risk reward standpoint, you can set up those numbers that are going to work in your favor. But you have to figure out, first of all, if you're a 50% winning trader. Maybe you're not. Maybe you're a 30% winning trader. Maybe you're an 80% winning trader. Doesn't matter. You got to figure that out first. So, like I said, I was going to ask someone from the audience to play along with this, but I'll have to do that. So if we flip this coin 10 times, okay, so this is a loonie. This is where this is from Canada where I live. So I'm just going to show you, this is tails and this is heads. Okay, so we're going to flip this 10 times and I'm going to try and guess if I can get it back to tails there. So I'm going to flip this 10 times and I'm going to try and guess which side is going to come up out of those 10 times. And I'm going to see what percentage I might be as a trader. Now, I know that a coin flip isn't exactly, indicative of trading because there is another skill to it. But I want you to understand more about the probabilities and more about the risk reward is where we're going down, like the road we're going down right now. So from this, so this is all recorded, so I'm not going to be able to fudge this. So right off the bat, we're starting off with tails. Again, this is tails. You guys saw heads. So I'm gonna say heads will be the next one. So I'm either going to be right or wrong, and I'm actually going to keep track myself here. Okay, so I'm going to say heads. I'm going to flip it, and it was tails. So right off the bat, I'm wrong on number one. I think it's going to be heads next time. Okay. Oh, look at that. I got number two right. All right. So how am I feeling now? I'm thinking let's do heads again. So I flip it again, and it's heads. Okay. So I got the third one right. I'm going to go with tails this time. So I flip it again, and it's still heads. So I got that wrong. I got number 4 wrong. Okay, so I didn't pick that one, so I'll have to do that again. So number 5 here, I'm going to say number 5 is going to be tails. So I flip it again. Oh, it's heads. So I got 5 wrong. All right, so 6. I'm going to go with tails again on 6. And it stayed heads, so I'm wrong on 6. Let's go with tails again on 7. And it was heads again. This isn't looking so good for me. Let's go with 8. I'm going to go with tails. Look at that. Got number 8 right. Okay. I'm going to stick with tails on number 9. Oh, got that one wrong. Number 9 was wrong. So I'm going to go with tails for the last one. This is the last flip out of 10, and it was a heads. Okay. So basically, I got 3 out of 10 right on that. Okay. So as basically, if this mimicked my ratio of wins and losses on a from a stock perspective, now I think I could probably do a little bit better if I did this a few times. But this is actually something interesting to think about as well. So all I did was flip a coin here 10 times, okay, and then took that data. Now, is that going to be enough of a sample size to give me an accurate number, an accurate probability number to know what my what my actual win-loss ratio might be? Probably not. Most likely not, because we do have something called winning and losing streaks. There might be a time where I get 10 out of 10 on these. Might be unlikely to happen, but it could happen. The reality is when I flip this coin, it's literally 50-50 that it's going to be, one way or the other. Well, sometimes in the markets, you know what? It's a 50-50 shot. Now we can do things. We can put things in place like technical analysis, fundamental analysis, all these kinds of things. We can put things in place that make it a little bit, more in our favor, give us an edge, which is the most important thing in trading. Okay, we can do that. But if we just look at it this way, over the length of time, you will find out that you're either a 30% trader or a 40% trader, or like I said, maybe you're a savant and you're at that 70-80% right level. I've not met too many guys that are that really that good directionally. Yeah, I know a few guys maybe in that 60% neighborhood where they can pick the direction. But the reality is, I think most people are probably a 40% or let's say 40% trader. Okay, so if we start looking at something here, and hopefully you guys can see when I go to my whiteboard here. You know, if we started thinking about trades, okay, let me get a better pen here. We started thinking about a number of trades here, okay. So let's say we're going to do 10 trades, okay, and let's say we're going to be right. Well, let's be really generous here and say we're right 5 out of 10 times. So basically, we're gonna assume that we're a 50% winning trader, okay. So now what we're going to do is we're going to have a win-loss ratio of 1 to 1, okay. So, you know, just like if you go to a blackjack table or whatever, whatever you put up on your bet, you get your bet back plus that one, okay. So, you know, we get a win, we get a loss, we get a loss, loss, we get another loss, we get a win, get another win, we get a loss, we get a win, and we got 4 wins, so we need another win, and we need a loss, okay? So if we're a 50% trader and we end up 5 and 5, which would be picking 50% right, and we have a win-loss ratio of 1 to 1, okay? Basically, we make $5 and we lose $5, okay? So we're basically at a zero, okay? Now, for those of you who don't know, if you know what a zero-sum game is, okay, basically a zero-sum game is just where someone has to win and someone has to lose, okay? Typically, most people believe that trading is a zero-sum game, okay? You know, somebody takes one side of the trade, somebody takes the other side of the trade, and you know, somebody's going to win and somebody's going to lose. Somebody's going to be right and somebody's going to be wrong when we start thinking about direction, okay? Now, the reality is, you know, trading is even worse than a zero-sum game, okay? So not only, you know, do we have a winner and a loser, okay, in this game called trading, okay, but we also have fees and commissions, okay? So if you start adding this all up, you know, a zero-sum game, somebody wins, somebody loses, so be it, okay? But if you add fees and commissions in there, then all of a sudden, you not only have to be right more often, okay, especially if you're 50% here, you have to be right more often to overcome this, right? You need an edge on this type of game, okay? So this 50% win-loss, as you can see, this is probably not going to work out that well, okay? It's probably not going to run the way you want it to run. So the question becomes, you know, is there something that we can do to change these scenarios, if you will, to make it more advantageous for ourselves, okay? And I know, you know, a lot of you that are with tackle trading, you guys understand the risk reward ratio, but for anybody that's new, that's just watching this YouTube live, you know, the risk reward ratio can change in a few different ways, okay? So we clear all this out, okay? We go back and we do our 10 trades again, okay? There's a couple of things we can do here, okay? The first thing we can do is we can change, let's say our percentage of being right and wrong stays the same. So our win-loss ratio stays exactly the same, okay? But now, excuse me, so now what we're gonna do is we're gonna up our reward, okay? So maybe we find trades that are a little bit better and we get a 2 to 1 risk reward, okay? So this is what we're changing here, is we're changing this dynamic, okay? So now maybe we get a little better skill level and we get this risk reward up a little bit and we change this dynamic. Well, you know, we get a win, a loss, a loss, a loss, a win, a win, a win, a loss, a win, and a loss, okay? So now every time we win, we get $2, and every time we lose, we only lose $1, okay? I think you guys can figure that math out pretty quickly. We'd win $10 and lose $5, okay? So is this a good scenario? I think the resounding answer to that is yes, right? Yes, it is. Well, what if instead of getting this reward up, which is great, we have techniques to do that, we can do that. But what if we could just get this loss to be a little bit less, okay? What if we had good money management techniques, okay? We use things like stop losses, okay? we figure out these risk reward ratios before we ever get into a trade. Okay, we figure all this stuff out. We use good money management techniques. We figure out how much we should risk on each trade. Okay, we should risk on each trade. Okay, that's probably the most important thing, because I'm just giving you this scenario of a 50% win-loss ratio. Let's say this is kind of our overall number, okay, over many trades. Okay, so if I flip that coin 10,000 times, okay, that coin game we just played there, if I flipped it 10,000 times, maybe I get a 50% win ratio. What happens if I go through a losing streak? Okay, so let's say I only get let's say it's a pretty rough losing streak, and I only win 2 out of 10 times. So I have 8 in a row losses. Okay, loss. I got one more win and losses. Well, now how do these numbers look? Okay, so now we're sitting here and we've got an $8 loss, okay, and we got a $4 win, okay, and that's just if I went on a losing streak. Maybe my overall number isn't 50, but let's say I had a real bad week, or maybe my emotions were messing with me while I was trading, or maybe we've got some other stresses going on. Then all of a sudden, this risk reward thing kind of goes out the window, right? So back to my original point when we started this little discussion, is our job is to be in the game long enough, right, to let the odds and probabilities, whatever those are, whatever yours is, I don't know what it is, you have to figure that out for yourself. Okay, if you're a 50% trader, great. If you're a 40% trader, great. Okay, if you're a 30% trader, you can still make money as a 30% trader. Okay, but what you have to do is you have to change this risk reward dynamic. Okay, this is the key. This is money management at its finest. Okay, so there's 2 ways we can do this. Like I said, if we happen to run into this 8 losses and 2 wins, well, what happens if instead of losing 1, we were able to knock that down to 0.50? Okay, so let's say we could use a good money management technique when we know things are not going well, and we can adjust our stop losses, or we can adjust how much we put into each trade, or maybe we learn to adjust trades. Okay, that's another thing that we can do. We can learn a skill to adjust. Okay, and maybe we're able to knock this down to 50 cents as opposed to $1. Okay, 50 cents. Okay, so we still get 2 here, we still get 2 here, and we only lose 50 cents here. Well, my quick math is 1, 2, 3, $4. Okay, so now our loss isn't 8, it's 4. Okay, well, 4 to 4, this isn't really a winning ratio either, but it's a lot better than 4 to 8. Okay, and this is how we do this through these money management techniques, is we make sure that we're solid in the way we do these things, and we stay around long enough that, hey, you know what, I just gave you the scenario where we lose 8 in a row. What happens if we win 8 in a row, or 8 out of 10? Okay, what happens if when this average gets up? I just flipped a coin 10 times there, but I'm telling you something right now. If I do something 10 times, it's very unlikely that the odds and probabilities are going to work out. Okay, it's just too small of a sample size. If I did that 10,000 times, okay, that seems like a lot, but over the course of a trading career, it's not really that many. Okay, if you did something 10,000 times, the odds and probabilities are going to take over. Okay, that's just math. Okay, and math is absolute. Okay, so the reality is we have to stay around long enough to make sure that this stuff works in our favor. Okay, and the way we do that, like I said, I've given you a couple of different little things, little scenarios right here. Okay, so money management is so vital to success. if we don't have it, then the reality is you probably won't be around for those really good days. Okay. So, we've decreased our losses, we've increased our rewards. Okay. We've done these little things. So let's see how this actually works out in actual practice. Okay. So I got a little thing here. Hold on a second. So when I put this little thing together, this just popped into my head, so I got to show this to you. But let me get this up here, and so anyway, I put this little thing together because like I said, I thought I'd be able to interact with you guys. But anyway, once I said, hey, let's play a game to figure out this money management stuff. And anyway, as soon as I said, do you want to play a game? That's what popped in my head. So I know that's kind of creepy, but I think it's funny. So we'll just go with it. So anyway, so I got some rules here. Okay. So what we're doing with this little game, we're just going to kind of play this out a little bit just so you guys can see. Like I said, I was hoping to have some participation here. You'll see when I read off the rules there, what my thought process was. Anyway, you guys can kind of play this at home as you go. You can use the same rules that we use and just see how you'd make out and see, kind of, you can work this out for yourself. Like I said, I was just hoping to do this very interactively, but I just don't have this whole thing figured out yet. But basically, with this little game, you can figure out what that eternal money management question, what should I risk on each trade? Okay. I need to know that risk reward. I need to be able to figure that out. Okay. That comes down to, I guess, before I get in here, let's go back to here for a second. When we sit there and we figure out risk reward, okay, we have to have a few numbers before we can figure that out. And for anybody that's new, this probably will seem very new to you. I know a lot of the tackle trading community already knows this, but basically, when we look at figuring out our reward to risk, okay, and this is one of the things we need to know before we figure out how much we're going to risk on each trade. Okay, we need to know what our reward to risk ratio is, and we need to know what our probability of success is. Okay, so like I said, if it's 50-50 or if it's 30-70, you need to know those numbers. Well, we have what we call an entry price. We have a stop loss. Okay, this is our tap out point. Okay, we don't let losses get big. We use all these all the time. Then we have what we call a target. Okay. And so, like I said, a lot of you be familiar with this, but for anybody who isn't, I'll go through this rather quickly. But, if I, let's say I got XYZ stock there and it's at $50. Okay. I'm going to enter that at $50. Okay. I'm going to buy that stock. And, let's say I've looked at the chart of XYZ here, and, I think it can get up to $55 before hitting resistance. Okay. Let's say that line's right about there. Okay. Well, my target would be $55. Okay. And so I stand to make about $5 if I'm right. Okay. Well, my stop loss, if I knew that my risk reward, as I showed you before, if I wanted a 1-to-1 risk reward, okay, then basically I could just say, okay, well, I could risk $5 here and I could put my stop loss at $45. Okay. Now, as you saw with 1-to-1, right, even if we were 50% right, all the time, we were still at zero minus fees and commissions. Okay. So that doesn't really work, right? So we know that we need something other than that. Okay. We know that we need better than that. So let's go for our 2-to-1. Okay. To get 2-to-1, then my stop loss wouldn't be here. Okay. My stop loss would be at 47.50. Now, I'm not going to go through all the technical analysis and all that stuff to come up with that. But the reality is I need to know that 2-to-1. Okay. That 2-to-1 is going to be able to tell me, whether I, at a 50% trader, whether I have an opportunity to win or not. Okay. And once I know this, if I've got a 2-to-1 ratio, if I'm doing my trades and I got a 2-to-1 ratio, then I can start to look at, I have an idea of my probability. I'm going to win about 50% of the time. Well, now I can start to look at things and I can say, okay, what's my worst case scenario? Okay. What's my worst case scenario? Okay. So I mean this from a losing standpoint. Okay. So let's say I believe that, my probability is 50%, but let's say it's down to 30%. Okay. Let's say that's our worst case scenario that we can think of. Okay. So that means I lose 7 out of 10 trades. Okay. 7 out of 10 trades. Well, if I have a certain dollar amount, okay, so let's say I got 10K in my trading account, okay, I have a certain dollar amount. Well, if I lost 7 out of 10 trades, okay, and I bet, or not bet, I put say $1,000 into each trade, okay, and I lost 7 out of 10, I'd be down to $3,000 left in my account, okay. Well, now I've only got 3,000 left. To get back to even is going to take a massive return on investment to get just even close to even again. Okay, so this is where we come back and we start thinking about, okay, what's the worst case scenario? And if I think that I could lose 7 out of 10 trades, then I might want to adjust what I'm thinking here so that I can be around long enough for my 50% probability to come through. Okay. Now I'll tell you something. This is 10%. Okay. If you're risking 10% on any one trade, then you stand to there's something called the risk of ruin. Okay. I don't know if you guys have ever heard of this or not. I'm sure some of you have. The risk of ruin essentially is where you lose 100% of your capital. Okay. And it's basically let me get rid of this stuff. Risk of ruin. Okay. Risk of ruin. Okay. So basically, if we looked at a chart like this, okay, and this was a percentage. Okay. So percentage all the way from 100 to 0%. This is the amount you're risking, and this is your capital across the bottom. Okay. The higher you get to risking all of your capital, 100% of it, the higher you get of risking as a percentage of your capital, the faster you face the risk of ruin. Okay. Basically, it means you're out of the game. Okay. So to say all this is just to kind of prep you to say that, hey, this little game that I'm going to play next, and I'll play it as if I were, we'll do a couple of different scenarios there so you can see how it works out. But the reality is a lot of traders I know use about 1 to 2% of their capital at risk. Okay, because the reality is 1 to 2% is down here. Okay, it means it would be very unlikely on this scale that you're going to bust out. Okay, if you've ever seen no limit hold'em, Texas hold'em, okay, and you see guys go all in. Okay, I've seen this so many times, it's crazy. But guys will push all in thinking that they've got the nuts, as it's called, the best hand possible, and then they come away, they're out of the tournament. Okay, because they pushed it all in. Well, the guys who actually really do well in those things and trading as well are the guys that manage the risk. Okay, they have good money management skills as well. They understand that their capital is the only thing that keeps them in the game. Okay, and we have to protect, we have to protect against this bust out mentality. Okay, so let's play this little simulation game that I got here, and we'll see I'll play it a couple different ways, and we'll see which one comes out better. Okay. All right, let's go back to this. All right, so what I did here was just kind of put something together. I've got a random dice generator here. I'm going to get rid of that. I got a random dice generator here. So basically, if we roll a 1, it means you win 1-to-1 ratio. If you roll a 2, it means you lose 1 to 1. If you roll a 3, it means you win 5 to 1. And then if you roll a 4, it means you lose 5 to 1. So basically, if you look at this, it's about 50-50. Okay, this would be a 50-50 kind of scenario here. So like I said, originally didn't really understand how this worked. I was hoping you guys could kind of start out with each 10K in capital and wager for each roll. Okay, so I'm going to do that for us, and we'll see how mine works out at the end. But basically, our job here, the trader at the end that has the most money wins. Okay, essentially is what we're doing here. So, each trader, playing must enter a wager in the box. I was going to have you guys write in, into the chat box. But anyway, you got to keep track of your own capital. I'm going to do this for us and decide what we're gonna do each throw of the dice. Okay. Now the key is, just like in real life, if your capital goes to 0, you're out of the game. In this case, we're going to do 10 rolls, but we might do 2 of them in a row. Okay. So let's give this a shot here. First, I will get a page out here where I can keep track. Get a new document. All right. So we're going to call this roll 1. Let's get this bigger so everybody can see it. And let's go to 20. So roll number 1. Okay. So I'll put the total that I'll bet beside each one of these. I'll copy this a bunch of times. If I can get it to do that. Let's see, paste. No, that ain't gonna work. There we go. That's what I wanted. Paste it again. No, not gonna work. All right, this was a lot easier. Let me see if I can do something a little bit easier. Let's go to that one. No, I had one of these here. Nope. Let's go to, all right, let's do it this way. Okay, we got 10K in capital. So we got 10K capital. Okay, and I'm going to risk $500, which is a lot. As you can see, a very big percentage of my capital. But I'm going to risk $500 each turn. Okay, and we'll see how I make out. We'll keep a running total of this after each roll. So put 1, 2, 3, 4, 5, 6, 7, 8, 8, 9, and 10. All right, we'll keep track of my my capital as we go. So I've got one of these random generator die generators here. So I'm gonna reset this. Now I'm just gonna roll this dice. This dice has 4 sides. Again, so it's gonna be a 1, 2, 3, or 4. If you remember the rules, 1 is a 1-to-1 win, 2 is a 1-to-1 loss, and 3 is a 5-to-1 win, and 4 is a 5-to-1 loss. So let's see how I make out. So I'm betting $500 on the first roll here. All right, let's roll it up and see what happens. So it came up as a 3. So right off the bat, I won 5-to-1. Okay, let me just make sure that I still got the rules proper. What did I believe? That was a 3. So yep, I won 5-to-1. All right, we're off to a good start. Okay, so we'll put this in here. So I bet 5 and I won 5, so I get an extra 2,500. So right now my total is 12,500. If I can get it to type in there. Number lock 12,500. So I'm up 12,500. Up just so. I bet 5, won 2,500. Awesome. Let's do it again. All right, so we roll again. Look at that, killing it right now. Just killing it right now. Another 2,500 bucks there. This is not exactly what I wanted to show you guys. The winning's fine and all that, but it's not always indicative of this. But we'll keep going just for in the interest of science. All right, so let's roll it again. All right, we got a 2. So a 2 was that we lost 1-to-1. Okay, so lost $500 there. Okay, so now we're down to 14,500. Okay, so let's keep going here. All right, let's see what else we got for us here. So we roll again. All right, we rolled a 1, so we won our 500 bucks back. All right. So we're back up to 15K. All right. Let's go back to our die there. Let's do it again. All right, got another 500 bucks in our pocket. We're just killing this right now. So we're at 15.5 if my math is correct. Let's keep going. Set again a number 2. So we lost 500 there. Okay, so we're back down to our 15K. All right, we got out to a hot start here. That's good. All right, what do we got next? Oh, we got a 4. We just dropped there. Just took it on the chin right there. So we're down to 12,500. 12,500. All right, let's keep going. Hope you guys are getting something out of this just to see kind of how this works out. Like I said, I was hoping we could kind of do this interactively so that you guys could all follow along. But what you can do is if you're watching this, maybe follow along. If not, you can definitely do that on the replay. And I'm sure you guys can always go to this website and do it for yourself as well. So, all right. So we just got 500 there. I can't type right now. So we got 13. Excuse me. 13,000 in capital right now. Let's keep going. And we got a 4. Ouch. Just took another hit. So we're down 2,500. So as you can see, we're down to 10.5. Okay, so after 9 trades, we're up a whole 500 bucks. Okay. So let's roll her one more time, and we got a 1. Okay. So after 10 trades, we're up a cool 1,000 bucks. Okay, we're at 11,000. Okay, now I just did that 10 times. Okay, the reality is if I did that 10,000 times, whatever the odds are, which I guess technically would be probably 50-50, it should turn out about to be that way. Okay, and because this is a 50-50 system, it probably about even. Well, again, if you start putting in the costs of trading, then all of a sudden that's a losing way to go. So what we need to do is we need to turn this stuff on its ear. Okay, we need to make sure that we're not a 1-to-1 or a 1-to-2, lose or win. Okay, so what if we just change this one dynamic? Okay, and then we'll run this simulation again. So we just change this one dynamic where if we roll a 1, it means we win 2-to-1, but if we roll a 2, we only lose 2-to-1 or 1-to-1. Sorry. So we could do the same thing with a 3. What if we could win, big? We get a real good one, 10-to-1. But we have our processes in place. We have our stop losses in place. We have all this, and so in this scenario, we would lose 5-to-1, but we could still win 2-to-1 or 10-to-1. This is possible, and this is just a simulation. But I think you guys will see. Let's just run this scenario again. So let's go through 10 more rolls to see if this changes our dynamic. Because really, those results were really not all that impressive. At 11,000 there, we made 1,000 off 10 turns. If you take into fees and consideration, that's really not a lot of money. So let's try this again. So I'm going to just put 11 here. Okay. And we'll roll the dice and see what happens. Okay. So we roll it up and we get a 4 right off the bat. So we lose 2,500 bucks right off the bat. Okay. So we're starting over again. So we're at 7,500 bucks right off the bat. So that's not a real good start. Okay. So we'll roll it up and we get a 1. Okay. So we won 2-to-1 there. So we bet 500 again. So we're going to go up 1,000 there. Okay. So it's a little bit better looking at this point. Okay, so we're at 8,500. Okay, let's keep going here. Let's see how this turns out for us. Okay, so let's roll it again. And again, this is a completely random number generator here. I'm not controlling this in any way, shape, or form. This is the best we can do, or at least the best I could think of, to try and mimic the way trading is, because we can put everything in place we don't really know how trades are going to turn out. We can put the odds in our favor, which is what we want to do. We don't really know how they're going to turn out. But what we can do, and what we can always do, is we can use good money management techniques. We can put our stop losses in. We can figure out our risk reward and make sure that we don't ever take any trades that don't give us the right risk reward. And then we can bet small. Okay, I'm betting really big here, and this may come back to bite me. So let's see how it works. Okay, so we got a 2, so we lost 1 there. So we lost 500. Okay, so we're down to 8,000. Okay, let's keep going here. So let's roll it again. So we got a 1, so we got 1,000 back there. All right, 2 to 1 reward to risk ratio. That's working out for us. So sorry, we're up to 9,000. Let's keep going. So a 4, ouch, that hurts. Okay, so we just dropped another 2,500 there. So what are we at? 6, 5. That's 8. Yeah, so that'd be 6,500. We'd be at there. 15. We got 6,500. Okay, too many more 4s, and we might be out of this game. Okay. So what number was that? That was 15. So we're 5 rolls in, and we're at about half our capital now. Okay, so we roll again. Okay, we just dropped another 500 bucks. Okay, so 16. We're now down to 6,000. So this isn't looking near as good as the first game, but yet the odds of us winning have actually increased. Okay, we increased that risk reward ratio, but we're still in the hole right now. Okay, but we got to keep going. We got to see what the ultimate results are. Who knows? Maybe we hit that monster trade. We don't know. Let's find out. Okay, let's do this one more time. Look at that. Boom. We just got a 3 to 1. Okay, so we got 10 times. So we just got 5K there. Okay, so we just pulled off a monster trade. Okay, we set ourselves up for a really good risk reward scenario, and we pulled off a monster trade, and that's put us back into black. Okay, so that's got us up to 11,000. Okay, let's keep going. Let's get to 18 here. We got a couple more here to go. Okay, so we got 18 there. Let's do this. Let's roll this bad boy again. What are we at there? 2. Okay, we dropped 500. Okay, so we're down 10.5. Look at that. We're right where we ended up after pretty much after the first time. So interestingly enough, very close to it anyway. So let's keep going. 19. Let's roll the bones, as Rush would say. Ooh, ouch, hurts. Okay, that's a 5 to 1 dropout. Okay, that's 2,500 down. Okay, so now we're down to 8,000. Okay, we're not looking so good on this one. Okay, so let's roll it for the last time, and we got a 3. So we just saved our own bacon by having a couple of monster winners. Okay, so we're gonna end this one, and we're gonna be up 13. We're gonna be up 3 grand. Okay, so you can see that if we were still doing the other one, if we go back and we compare the other one where we didn't have these monster winners, those 3 would have only got us back to even of what we were winning before. We would actually be in the hole here. Okay, so we got 3 there, and we got 3 there, or sorry, we got 5 there. I apologize. We got 5,000 there. We got 5,000 there. But if we'd had that risk ratio where it was 5 to 1 and 5 to 1 instead of 10 to 1, then that would have put us at that would have been 8,500. 8,500 to there. Then we would have lost. That would have been 8. Then we would have lost again. So 8, that would have been another 2,500 off of that. So we would have come out with a negative had we not had that big risk reward ratio. So this is what money management is all about. It's about those risk reward ratios. It's about changing the dynamics. Okay. So, I think hopefully you can see through the simulation, and I'd like to do more of these. I got a little bit of time here. I might do another one of these, because obviously when you're only doing this for 10 turns, it's really not indicative of a whole series of trades, right? If we did 100 of these, then the math would probably work out a little bit better. But I think that's kind of one of the themes of tonight as well, is, or at least that was the message that I was trying to convey tonight about money management. It's about hanging around and being in the game long term. Okay. What if, and let's go back to the original rules here. What if we were on the other side of this? Okay. What if we didn't have this? Okay. If we didn't have this 10-1, okay, maybe we're still at the 2-1 here, but we had some trades where we could really take a bath on it. Okay. Now sometimes, sometimes we do have trades. Okay. There's lots of different trades where, let me see if I get my pen to work here. There's lots of different trades where, this 5-1 loss is very possible, but there's some other probabilities that come into play as well. Okay. So what if our probabilities, we just basically, it's 1 out of 4. Okay. It's 1 out of 4 if we get one of these things. Okay. That's about 25%. Okay. But what if our probability was that, there was only a 5% chance that we were to get this loss? Okay. Then that would also change our dynamic. Okay. We could still have a winning system here. Okay. We could have 2-1 wins on 2 of these rolls and 1-1 loss and a 5-1 loss if there was only a 5% chance instead of a 25% chance of getting this. We'd have to run the math and see if those numbers work out for us. Okay. So there is opportunities, but good money management means you really understand this stuff, and you let the math, again, I can't stress this enough. It's one of the things that one of my first mentors taught me the most, was the math. It's just, the math has to work out. And the reality is money management is a big part of that. Okay. You have to have good stop losses. You have to have good risk reward ratios. You gotta let the odds play out. Okay. Let's do one more of these. Let's do another round here to see just how this works out. I think hopefully you guys are getting something out of this. This is easy. You need a spreadsheet and that random die generator, and you could even start throwing in there, just at your own home there. You could change this die to an 8-sided die, whatever, and start to put your own things in. But you can see, if you just play this game, you can start to see, and what I haven't done for you guys is I was wanting to show you that if, and the math didn't work out for us really, but what I was showing you is that if you risk too much, you could find yourself in peril. Okay. And I just grabbed $500 here. $500 is way too much. I'm just telling you right now, that's a terrible money management strategy. And that was the whole point of it. Okay. If I hadn't have put that 10-1 in there and we just suffered all those losses, okay, or like I said, we get to that point where, there is that big loss is waiting to come, even though the probability of it is very low. Okay. Those kind of losses can devastate you. Right. So if you think about it, we were down pretty big before we got those 2 big wins at the end. Okay. And so really this was way too much of the portfolio. So let's do this one more time and see what it comes out at. Okay. So 21, let's go to our random generator here and let's hit this thing. Okay. So a 3. So the 3 is a loss right off the bat, or was that a win? I can't remember. Roll means we win 2-1. So that would have been a 10-1 win. That would have been a great one right off the bat. Okay. But let's go through this scenario where we win 2-1. Okay. We'll see how that turns out. So 2-1, we'd be up an extra 1,000. Okay. Assuming we bet the 500 again. So 22. Let's roll again. Okay. So we got a 4. Now again, that with that 5-1, we'd have to change the odds of that. But for this, in all intents and purposes, we're just going to use this. Okay. And we'll take our lumps there. So that would have been a $2,500 loss. So that you can see that this is going to kind of skew this a little bit. But what I really wanted you to see is that it really matters how much you're risking. Okay. So take 2,500 away from there. What's that look at? 9,500. 85. 10,005. 8,500. Okay. So 23. Let's see what it gets us there. And we got a 2, which was a loss. Was that a loss or a win? That was a loss of 1 to 1. So we lose 500. Okay. So down to 8,000. Let's go 24. Oh, back there. Let's roll the bones again. And we got another 2. So we lost another 500. Okay. Down to 7,500. Okay. So now we don't have, in this scenario, let's say we're not finding those 10 to 1 trades anymore. Maybe we've only got those 2 to 1 trades. This is where it becomes even more important to be conservative when you talk your money management strategies, right? How much are you going to put into each trade? Okay. So again, you got to know your probabilities. You got to know how much you're risking. You got to know what your reward is, and then you got to take your sizing, whatever you're going to place on each trade. You got to put that in according to the probabilities and the odds that your system is. That's whatever your system is running. Okay. So let's did I do that? 500. Yep. Okay. Let's roll another one. Roll again. Got a 3. What was a 3? 3 was a 2 to 1 win, I think, right? 2 to 1 win. All right. So 2 to 1 win. So we get an extra 1,000 there. 25. We get an extra 1,000. We're back up to our 8,500. Let's go to 26. Keep it going. Let's roll it again. 2. So we just took a $500 loss. All right, we're down to 8,000. Okay, 27. So again, I think if you look at this and you look at the fees that we have to pay as well to play the game, all of a sudden, if we're not crushing it, ooh, that one hurt. I think that was the big loss, wasn't it? Yeah, that was the big loss. So that's another 2,500 down. That's 5,500 bucks. Okay, 28. So let's roll. Keep her rolling here. And a 1. So we got a 1 to 1 win there, I believe. 2 to 1 win, sorry. So we get an extra 1,000 there. All right, we're back to 6,500, but we're still bleeding. Still bleeding, and we don't have that big risk reward to save us in this one. So you can see how all these parameters change and how we need to change with that. Because maybe you're using a system, maybe that system that we had before gives you that ability to pick up those really big winners. Okay. If you're using a system that doesn't give you that, or your odds and probabilities don't have that, if that's not in the cards for you, then you definitely have to adjust how you're playing the game. Okay. So 29, let's roll it again. And again, another 1. So we won, we get 1,000 there. Okay, so we're at 7,500. Okay, and number 30 here. One more time. Let's see what can we get back to break even? And we got a 4, which is the big win, I think, wasn't it? Or was that the loss? I can't remember. Lose 5 to 1. So we just dropped 2,500 bucks there. So that one hurt kind of bad. So we basically ended up with half our capital in that scenario. So hopefully you can see that when the rules of the game change, okay, so I changed the rules 3 different scenarios here, okay, and just with a random generator, so 25% chance that any of these scenarios are going to happen, okay, and we could do this another way, where you could actually have more wins than you do losses. But the reality is we looked at it, and I was only, when I was flipping a coin, I was only able to get 3 out of 10. Now I only did that once. I'm pretty sure I could probably get up to 50%. But if you're a 50% winner, okay, then that really, basically that's your winning here. And as long as you don't take really big losses, which again, also is a money management thing, right? This is where our techniques come in, our stop losses, our risk and reward. As long as we don't take those big losses like these number 4s here, then we're probably not going to run into this last scenario here where we basically got cut in half. Okay, so we got clipped there. So I guess, like I said, my number one message for you guys tonight, and again, I was hoping that we could all play this interactively and see who the big winner was. That was my plan. I may have to try this another time on a different platform. But you know, try this at home. Okay, change all these parameters and give it a shot for yourself. Grab a die out of a board game and run through these scenarios so that you can see, you can get this feel that you know that you can use these techniques to help yourself out. And if you really want to learn these techniques, then you got to get over to tackle trading. This is what we teach day in and day out. We got shows, we got blogs, we got coaches that teach you how to manipulate these ratios and how to put the things odds in your favor. This is what we do in this community, and I think it's so special that we have this great community. We have great students, great coaches. You know, everybody over Tackle. We like to learn together. We like to you know, share our information and really have some fun doing it. So anyway, I hope you guys had a lot of fun with this tonight. I know I enjoyed coming out, and again, like I said, my apologies that I kind of spoofed on the less interactive part of it. But like I said, hopefully you got something out of this. I know I enjoyed doing it for you guys, and you know, feel free to go over to tackletrading.com, check it out. You know, it's one of the best experiences I've ever had myself. You know, part of being a coach and a community member. I don't think you can find this anywhere else. So, all right, folks, that's my time for tonight. I appreciate each and every one of you. Thanks, Tanyan, for helping us out tonight as well. And yeah, get on over to Tackle Trading, and we'll see you over there. Take care, everybody. Bye for now.